Debt. Debt is a weapon, it's a tool. It can make you, it can break you. It could destroy your financial future. It could also be something you could wield to make yourself wealthy, to build financial freedom, to help you retire early even, to make you a millionaire and a billionaire. And if you study all of the greats in history, all of the multimillionaires and billionaires, they've used debt for good. So use debt for good, not for bad. In this video, we're going to talk about ways you can use leveraged finance. So leveraged finance is the idea that you borrow a ton of money to buy businesses that cash flow, to buy real estate that cash flows and appreciates in value, to buy assets, not liabilities. You don't want to take your debt and use it to buy stuff. You don't want to pay for your medical expenses. You don't want to pay for your food, for your trips, for your car. You don't want to pay for any of that with debt, even your education. You don't really want to, it's kind of iffy, you know. Some people argue that the value from their education is worth the amount of money that they've spent and accumulated in debt. And in some cases it is. Maybe if you went for a Harvard degree and you got that $250,000 a year job, maybe then it was worth it. But I want to talk to you about how to use debt as a weapon effectively. How do you use debt as a tool that's going to help you actually build real wealth? And you're going to see in this video the power behind debt and really actually how you can use it to your advantage. So stay tuned for that. Debt really can be a moneymaker. I, for instance, am in debt. And this is what you're waiting for. You clicked on the thumbnail, you're thinking to yourself, either you want to pay off debt, that's why you're here, you want to pay it off fast, you checked out my previous video last week, or you're brand new to my channel. And if you're brand new to my channel, by the way, welcome to the channel. Thank you so much. My name is Mike Rosehart, and I do a lot of videos on personal finance. I also do a ton of videos on real estate investing, and basically how you can spend less, earn more, and then maximize those returns on the money that you've saved. So we do a lot of videos on frugality, on how to slash your budgets, right? We'll bring this prop out again to cut your budget down. We'll talk about how to cut your debt, right? Debt is often a symptom of another problem, right? Debt itself is just a symptom. If you have a lot of debt, a lot of credit card debt, a lot of maybe student loan debt, maybe you have some bad car debt, whatever the type of debt you've got, it's likely this bad debt was a symptom of a root cause problem. Bad spending, poor employment prospects, all of these things, you know, maybe some bad health, something happened in your life that led you down this path. And I want to help elevate you. I want to help bring you out of that cycle. I want to help bring you out of that spot, that alley that you're in right now, and bring you up, help you see the sunlight, help you create some real wealth for yourself, and just be better off financially than you were before. So last week's video was about paying off debt quickly and the debt snowball strategy and all of those methods you can use. And today's is about how to use debt to actually help you start making money. So once you started paying down all that bad debt, right? You've consolidated, you've renegotiated, now you're obliterating that debt, your RCO, right? You renegotiate, you consolidate, and you obliterate. We're done that now. Now we're gonna talk about the value. If you've got some high income coming in, you're starting to save, how do you put that money to work? Leverage. You use the sharp edge of the sword, you use leverage for this sword to lift way more weight than you could lift with just your hand. You use this weapon to do more than you could have before, do more good for your financial portfolio. You go and take $100,000, let's say hypothetically, and you buy real estate with leverage. You borrow the money from the bank, 80% of the purchase price, right? And you put up 20%, let's say hypothetically. That's a 5-to-1 leverage. The bank puts up basically $4 for every dollar you put up. So your dollar buys $5 in real estate. You buy $1 million in your money in real estate, and you can buy $5 million in real estate and get the cash flow from $5 million in asset value for only the cost of $1 million. So leverage can take basically really good opportunities and make them insanely good. You get a 25% return on investment, lever that up 5-to-1, right? Borrow debt against that asset and then pay off the cost of the debt, and you will make 5-to-1. You go from 25% return to 100% triple-digit type returns. This was one of the ways that I accelerated my portfolio. And I embraced frugality, and that was one of my main things. But the 1-2 punch was like frugality, which resulted in a ton of savings, and then smart investing using leverage. So I'd buy real estate assets that performed well from a cash flow perspective. I didn't bet on appreciation. I didn't buy for speculation. I bought knowing I can make $1,000 a month from this property if I used the bank's money. And here's the key thing, because what makes debt good? You know, sure, you can use debt to buy real estate, and there are people who are borrowing, you know, at 15 and 20%. I've seen some wholesalers and some people who are into loan sharks to buy real estate and buy good businesses. these people have bad credit scores and they need to watch my video on how to improve their credit score, go and find those videos. You can see them on my channel, but how the actual algorithm works for your credit score. And effectively, they weren't utilizing the smart principles of borrowing cheaply. Good debt is cheap debt. So the reason I like real estate so much, more than public equities, more than when I was trading stock, and by the way, trading is a great way to make money. You can still make a lot of money trading, but because of the leverage prospect isn't as good, you can't borrow as much debt as cheaply, right? If you're borrowing to buy companies or buy stocks on the open market, you're gonna have to pay 6, 7, 8, 9, 10% interest rate. So your KD, or your cost of debt is very, very high. And high cost of debt means that your spread is lower. So let's say your asset is returning, let's say you buy something, call it a stock. And this stock pays a 6% dividend per year. If you're borrowing at 8% to buy that stock, right? Maybe you're borrowing 75% of the value of the stock and you're putting up 25%. So let's say the broker gives you a margin account and you can go buy 3-to-1. This is something you can actually do. It's called leverage trading. If you do leverage trading, by the way, higher risk, way higher risk, because if you lose, you just lost the bank's money and you personally owe them that money. So that's why I don't like leverage trading. It's very, very risky. I would not recommend that for like 99% of the people watching this video. But in real estate, you're buying safe, secure assets, right? Assets that produce stable cash flow. That 6% dividend, if you're borrowing at 8%, the dividend isn't even covering the interest cost. It can't service the debt for you. When I buy real estate, I'm borrowing at 3.5% on 5-year fixed terms against assets like real estate properties that I'm buying, the cash flow 10 and 12%, not including appreciation, they're getting a 12% return. So what I'm getting 5-to-1 is the difference between the 10 or 12% return on my asset, ROA, and the difference, which is the cost of debt, or KD. So it's your ROA, your return on your asset, minus your cost of your debt. If your return on your asset is 7% and you're borrowing at 8%, you've got a negative spread. That's bad debt. You don't necessarily want to use debt to buy real estate and to buy assets like that. You really want to use your debt, you want to use cheap debt to buy strong performing assets. So really stable, safe, secure property is my favorite, because no matter what's happening in the market around you, you can usually rent your property out on a 1 or 2 year lease and get consistent rental income coming in each and every day. In a recession, rental income tends to actually stay relatively stable. Despite the price fluctuations of the properties, you can hold them through a recession, right? You get consistent, stable rental income. I aim for $1,000 a month of property net of paying the mortgage and all expenses. That's what I aim for. If your market doesn't provide that for you, like you're in Toronto, Vancouver, LA, it may be you have to go to an outlier market where you can find that cash flow. Or maybe, just maybe, you don't buy at all, and in fact you go and borrow some money and rent out properties and re-rent them out on Airbnb, or re-rent them out and resell them. It's called the rent-to-rent strategy, or rent-to-let strategy. There's tons of strategies and ways you can use leverage. Maybe you just want to buy businesses. You can go buy businesses that generate 30% returns on investment and lever that up and basically get the spread, right? If you're borrowing at 6, 7% and you're capturing the spread, you're getting that 20% difference 3-to-1. So that's a huge advantage. That can give you 60, 70, 80% return on investment. You've got to use debt for the right type of thing. I just like sliced my hand up on this blade, right? You don't want to use debt to buy stuff. You don't want to use it to pay for vacations. You want to make sure you understand your relationship with debt. Some people don't have the ability to delay gratification. They don't have that ability to say no, right? And if you're that type of person, it can make a lot of sense to restrain yourself, right? It can make a lot of sense to say, you know what, for me, I can't have a credit card. Some people are like that. They honestly can't control themselves. They say, I got to lower my limit to 500 on my credit card because I can't hold back. If I have the money available, I'm going to spend it. And for those people, I'm going to tell you to pay yourself first, pay your debt first. The minute you get a paycheck, have it automatically transferred against your credit card debt, against your line of credit debt, against your car loan. Automatically take half your paycheck. You will find a way to live on the other half of your salary. Trust me, you will find a way to re-engineer your situation to live on less, to get more for less. And maybe you won't go out to eat as much. Maybe you won't be able to go on that trip. You might have to delay that trip. But that's okay, because you're going to pay down your debt. You're going to be in a much better financial position. And then in the future, you can pay for that trip with cash. Pay for that trip with money you've actually earned and saved, as opposed to paying for it with your future earnings. That's obviously not a good prospect to be in, right? You want to make sure you understand your relationship with money. You want to wield debt. It's one of the best things you can do. Every millionaire, every billionaire knows how to wield the debt weapon. I myself have millions in debt, and you guys are waiting for this. I kept it all the way till the end to expose myself. I have several $1 million in debt. At one point, I had borrowed personally, I convinced all of the big 5 banks in Canada to lend me mortgages. I was getting like 3-4 mortgages at each institution. I closed multiple deals at once, so I had multiple mortgages all coming within 1 month. I borrowed $1 million in 1 month before from the bank at an average cost of debt of 2.5% fixed against secured cash flowing property. Now, when the property appreciates, say, 5%, or you get a cash flow return from your rental income of say 10%, and you're levered with $1 million, you get the spread. So if your assets returning again 9%, which a lot of my properties I was buying were 9 and 10 cap rate, you're buying a 10 cap rate property and you're borrowing at 2.5, 3. You're getting the spread, you're getting the difference between that, the 7% difference, 5 to 1. So my return was 7% times 5, which is 35% return on investment, and my assets were paying the debt for me. The debt is paid by the asset. If you have to pay the interest payments on the debt, it's probably not good. When you're buying land, in real estate, sometimes there's no cash flow, doesn't self-service the debt, you're paying the debt. That's kind of, in a lot of ways, bad debt. I mean, at least you're against appreciating asset. That's sort of good about it, but at the end of the day, you gotta make sure you're cognizant of the cost of that debt, and that's a big one, I think, to understanding how to wield the weapon, is how do you, and there's a whole bunch of videos I'm gonna do on this, how do you actually get the debt, and what does that mean, right? A lot of people are seeing the thumbnail, they're thinking, wow, like Mike is, millions of dollars in debt, this is scary. I could be debt-free tomorrow. I could liquidate all of my properties and have a huge surplus, right? Millions above and beyond what I owe in the debts. And so I actually have a positive, really, really positive net worth, and it's really good to borrow that debt because it's so cheap. If I had millions of dollars in debt and it was at 9% interest rate, that would be scary. Or 10% interest rate, that might be really scary. That would be a situation where I'd be paying hundreds of thousands of dollars in interest each and every year, and that's not smart. You want to be frugal in your business as well. And when I say frugal, I mean value conscious, right? The difference between being cheap and being frugal, right, is frugal people look for the value play. They want that good quality food ingredient for the same price as the cheap stuff. They want that good lifestyle for less. And that's what it's all about with debt, is finding ways to get that debt, get it cheaply, and then use that debt to buy strong, cash flow producing, appreciating assets. That's what good debt is. And this video is all about good debt, not bad debt. This video isn't about helping you pay down your bad debt. It's about helping you understand how do you get good debt and how do you use that good debt more or less to better your financial future. As always, the key to unlocking wealth through you is to spend less, earn more, and maximize your returns. That's what it is at the end of the day. I would love in the comments, by the way, if you are new to my channel, welcome. Please hit that subscribe button in the bottom right corner of the video and smash the like button on this video if you enjoyed it, and jump in the comments. Let me know how you're wielding the debt dagger, the debt sword. How are you using your debt as a tool? Are you buying property with that debt? Have you used debt to buy businesses? Are you using debt to buy public equities? What are you using debt for? Are you just focused on paying down your bad consumeristic debt like student loan debt? That's good too, by the way. That's going to improve your net worth and improve your financial future. I want to hear about that. I want to do more videos that are going to help you to pay down your bad debt, pay down your credit card debt, pay down your consumer loans, pay down all that debt that's not good, right? That you have to pay the interest on, and help you start investing in assets that are appreciating, that are producing cash flow, that are building your wealth and helping you to earn more and maximize your returns. At the end of the day, that's the secret. Spend less, earn more, and maximize your returns to unlock wealth through you. That's the 3 levers you have in control to build your wealth, to build your financial future. I'm so thankful, by the way, guys. We're gonna go for 10,000 subscribers here, and I wanna let you know, if you're commenting on this video, if you comment on my videos, pick any of my videos, you comment on them, gives you an extra chance to win. I'm gonna be giving away basically a free day with me if you're local, or a coaching session if you're not. It's gonna be completely free. We can talk on Skype, we can have a video call, or you can come down and spend the afternoon with me, follow me around and see some of my properties, see where I live, see all of this. So it's a big win for whoever gets to win that. At 10,000 subscribers, that'll be the giveaway. Going to give the opportunity to get it up and close and personal with Mike Rosehart and see how I do it. How is Mike buying 1 or 2 properties a week right now? What does it look like behind the scenes in our business? What does it look like in London, Ontario, in all these markets that we're investing in, and all these properties? I'll take you around, I'll show you basically everything you get to see behind the covers. So share this video, please, if you got some value, or if you got more value from another video that I did, share that video on Reddit, Instagram, Facebook. Just share it around with your social network. I'm sure even if 1 person finds the video, and then they benefit from it, that'll be worthwhile for me. That's how you say thank you. I don't charge anything for all these videos, and you guys know, multimillionaire here, I don't do any courses, I don't sell any. I have 2 free ebooks you can get on my website. I do all this content for free. I do a lot of responding to comments completely free. I do the Wise Wealth Show every Wednesday at 7 p.m. Eastern. Jump on. It's a live stream for about an hour and a half. You can ask me anything, and I'll give you free coaching. I don't do any coaching on the side. I have no interest in doing coaching. I have no interest in doing courses right now. I don't feel it's right to charge you guys for that. At this point in time, it's all free. My only ask, the only way you pay me back, the only currency that I have is your appreciation, and the best way to show you that you're appreciative of the content that I'm creating for you is to smash that like button, jump in the comments, and share it everywhere. Share it with one friend, share it on, wherever the thread is. There's this guy, Mike Rosehart, check him out. He's dropping a ton of free value. He was able to retire, at 25, doing a lot of these things with the personal finance community. Let's share it around. I'm hoping we can have impact on tens of thousands of lives. We can help people get better with their financial futures and really understand how to wield this debt sword, how to get their money management under control, and really build a better financial future for themselves, and honestly, a more financially free version, one where we have the freedom of choice to do whatever we want to do with our lives. Thank you all for tuning in, and I'll see you next Wednesday for the live stream, Wise Wealth Show. Bye, guys.